Hi guys, this is Brian Neal with TradingBeFree.com again, and just want to review some of the trades that we have on and that we took this morning. And yeah, Applied Optoelectronics just keeps moving higher and higher. We caught the double bottom pattern here. It was our top trading setup in the weekly alert last week, and some of these trades, about one or two a month, will make this kind of move where you have a 20-30% move within the first couple weeks or so. And it doesn't happen that often. It does happen though, and when it does, you just have to let it go higher. In this case, Applied Optoelectronics had very, very strong growth. I mean, if you can find a stock that's growing their earnings and sales, in the mid to high double digits, that's usually really, really good. If that can sustain for a couple years, 2-3 years, then that's great, and you can look for these really bullish consolidation patterns on these stocks. But Applied Optoelectronics has, I think this past quarter too, has had mid to high triple digit profit and sales growth. I know in a recent quarter it had over 1,000% earnings growth and really high sales growth too. And it has a very high return on equity, and other key characteristics are really good for the stock. So in this situation where you have a real strong breakout out of that bullish pattern, that double bottom pattern, and you start finding support at the top of the Bollinger Band. The stock has a lot of liquidity too. Sometimes it just takes off and you just have to let it go higher. And because it has the really strong and accelerating growth, it can make this kind of move. Okay, it's going to support that kind of move. And if you trade just these stocks, you'll have more big winners like this, is my point. And this one certainly continues to surge higher. I thought it would go to 92 and pull back to maybe the 9 EMA before another surge higher, but it just keeps going higher and higher. And the estimates, I think, for this year, which is almost, it's 2 quarters over already, but the estimates this year, I think, are going to somewhere in the 550 range right now, I think, maybe higher. And they tend to beat the pre-announced earnings, so that might even go higher when they report in early August. So this could, this could go to 110, 120. Who knows? I'm not going to count on that, but a swing trade at this point, what I want to wait for is a pullback to the 9 EMA or the 20 EMA, and then just wait for the next surge higher and sell into that on a swing trade, on a technical swing trade. And we're just going to keep holding it in the 3 Stocks 12th newsletter and still until it shows signs of fading, which right now it's not. So I think that's up like, almost 40% now in less than 2 weeks. So awesome trade on that. And the other one I want to show you today, though, is Facebook. Facebook just broke out of a very bullish pattern, and a lot of traders aren't familiar with this. This is the ascending base pattern. Facebook also has very strong growth, not quite as strong as AOI right now, but it's one of the top growth stocks in the market. And it has, I think, sustained sales and earnings growth in the mid double digit range with a high return on equity, and other, the classic growth stock characteristics are all strong. We featured the stock breaking out of this consolidation recently in the either weekly alert or daily alert on our site. Okay, but this is not just a flat base here. This is an ascending base where you have 3 successive higher lows and 3 successive higher highs, on a daily chart here. And then the entry point on that pattern is a break above 156.50. Now, of course, all these won't make a big move, but heading into the earnings release, we know that Applied Optoelectronics has had a really strong demand for their optical equipment, which, says some good things about, online video and, Amazon and Facebook and Google. And overall earnings are looking strong so far. So that bodes well for a company that tends to beat by a wide margin heading into their earnings report. Okay, so you've got that going on. You also have Snapchat, which is diving below its IPO price. So we know that Instagram is doing well, and investors are, fleeing Snapchat, and they want to buy a social media stock because that's where it's at. And Facebook is the king of that space right now. So money is flowing into Facebook ahead of their earnings release. And so those factors combined with this very bullish pattern prompted us to put this in the newsletter, and so far it's off to a really good start. But that ascending base pattern is a very bullish pattern. You often get a parabolic move into a top for a stock out of this pattern. I'm not saying that Facebook is going to top out up here. The valuation doesn't seem too bad at all right now from my perspective, even with this big move here. But that's a possibility. We could see a parabolic move and then a larger consolidation. But that's going great. Now the trades we looked at this morning for day trade, we're looking at Netflix, and didn't like Netflix so much because Netflix was just a slower moving stock, has a higher float. This follow-on trade where it breaks above the prior day's high after a catalyst. It's a good trading setup, but I knew that it would maybe go 2-3% from there today, so I didn't really get that excited about a day trade. It didn't break out of the prior day's high until after 11 a.m. So at that point, I was just like, it might go up 1 or 2%, but I don't want to hold it to the lunch hour and sit around and wait all day for it. And I want to see that breakout of the prior day's high early in the day, and we didn't get that. So still doing pretty well and hanging up there. The other stock we talked about this morning was Kohu, and we've been talking about those stocks that suddenly find support at the top of the Bollinger Band. When the fundamentals are rapidly improving, it's going through this rally phase, and it jumps over that Bollinger Band, comes back, finds support at that top Bollinger Band, and then breaks a prior daily candle, and then often makes a nice move higher. And in this case, Kohu, we wanted to see this go up to 21 or so, and it hit the 1975, and it wasn't here, but here, and it quickly made it 2% or so, I think. Let's see, 95, around 2% or so move higher, but then it pulled back. This stock doesn't have as much volume as I talked about this morning. It's a little thinly traded, and so I just took a small starter position. What I was looking for on this was a small starter position, and then if it would have made, let's say, a 3 to 5% move initially, had a nice consolidation, and then showed some signs of strength after that consolidation or pullback that wasn't too steep, like this one, then add to it, and then try and write it up to 21 or 21.20, whatever the highs are above 20. I think those are the all-time highs, or at least 52-week highs. And didn't really do that, so we took it off, a little bit below the technical entry point here, and just cut that. And the other stock we looked at for a day trade was Momo. Didn't see any explosive bottoming patterns today. That looked really good. Didn't see any earnings eruptions trades. That looked really good. Earnings season is just starting, so we're going to see our first 1 or 2 of those over the next week, I would think. Who knows? Maybe CSX will do that for us. Or there's some other stocks coming up, too, that could beat by a wide margin, raise guidance, and form that pattern, that strong pre-market pattern, along with the gap higher. And so far, we haven't seen it. And we usually have 5 or 10 of those a month, and those are the whoppers. Those are the ones that really are exciting and make really big moves, and often go up, 10, 20% or more within a day or two. And still haven't seen that setup materialize yet this quarter, but we'll have some here in the days ahead, I'm sure. Yeah, so Momo was actually, you can see what we were looking at pre-market here, and you can see this little flat base pattern pre-market. And at that point, we were thinking, okay, if it breaks above that, I'll take a starter position, and it may pull back and fill this gap down to 42, but I'll drop a stop below here, let it go into here and see if it comes back. If it does it quickly, if it fills a gap and comes back quickly, I'll add to it. If not, I'll just try and take it off at a small profit or near the entry point. And so it broke out of that flat base pre-market after the bell, jumped in with a small position, pulled back a lot, didn't start moving back higher though until close to 11 a.m., which I don't want to see. And now it's back above the entry point, and it may break out this afternoon. I'm on the fence about it. I don't know if I want to keep this. It's a very good entry point on a swing trading play on a rounding bottom on a daily chart. So I may, although I have another swing trading position on this already, I may just cut out of it for the day trade, for a day trade, and then just focus on other stocks coming up. I'll probably do that. Yeah, so what I like to do is on the day trading setups, I like the explosive bottoming pattern talked about in the site. I like the earnings eruptions trade. And I also like really good day trading setups near the entry point on the daily chart and a good daily chart pattern on top growth stocks and stocks beating estimates with rising future expectations like Applied Optics and Facebook and Momo and Netflix and so forth, and also a lot of smaller mid cap stocks. But if the day trade doesn't play out, if it doesn't get off to a strong start, I won't add to it. I'll start with a small position, and then if it gets off to that 3 to 5% strong start, I'll add to it on that first pullback as long as it happens, before say 10:30, 10:45, and then sometimes get really big same day winners doing that. Today that wasn't the case, but we're writing Applied Optics and Facebook and some other good swing trading positions right now that are doing really well. So we have a couple good stocks, good trading setups that we featured this week in the weekly alert, and that are getting off to a pretty good start. And I don't have time to talk about those right now, but you can go to our site and get a free trial and see those. And we also have all of our stock picks over the past few years, so you can actually go in the archive and click on each chart and see exactly how each one did over the past few years. We go back, I think, to 2008, even 2009 maybe, on that archive. I'm not sure, but the past several years. And so we show all the featured trading setups to you, and we're one of the few services that do that. And you can just go and click the chart inside the newsletter and see how exactly each one performed since being featured. Some people like the short-term swing trade, that initial push higher out of the good chart pattern on a daily chart. Some people like to hold a swing trade longer, maybe dropping the stop below the prior low on a daily chart, maybe waiting until the uptrend support is broken with a closing price. But you'll find a lot of great trading setups in that archive. Free on the site, it's 3 weeks. You just put your name and email address in there, and I'll send you the top two trading setups for the week and for the next couple weeks too. I was thinking on Tuesday or Wednesday of giving an update, a market update, and giving you a pulse of what's going on in the market that week, get an idea of where the market's going in the near term. And I'm going to start doing that on Tuesday or Wednesday, and I think it'd be a good time to take a look at where the market is right now. On our site, on the weekly alert, you can log into the site, or we'll send you the email too, and you can see our market analysis each week. That comes out on Monday night, and then by Tuesday or Wednesday, we'll have more information and sort of give you a midweek update on YouTube. One thing I want to point out, first of all, when I look at the market right now, is that we do have this little double bottom pattern here on the NASDAQ, and it's on a daily chart. It's not over a long period of time, but still pretty bullish. The market continues to trend higher. We had this pullback on the NASDAQ, and it looked like we're going to break the prior lows. And it was getting down to that area again, and it sprung back up, and now it's broken the all-time highs and 52-week highs. So at this point here, when you're coming back to test this area, we knew we were, not going to break the uptrend on a long-term basis. Another thing was happening last week was on the S&P 500. We were breaking new highs, but we broke this short-term downtrend on the S&P 500, gapped above it, and closed strongly. So that's another really strong indication right there that the market's going to continue to trend higher. And given the early read on earnings is very positive, the number of downgrades and negative estimate revisions, is lower this quarter than most quarters. And we had a pre-announcement from Applied Optics and Kohu, and the bank earnings were looking pretty good. So it looks like a good earnings season. And that combined with the technicals in the market, telling us the same thing by breaking this short-term downtrend, made us continue to be bullish. Now, if we would have seen this drop here on strong volume below this point, that may have been a different story, and we may have seen a larger pullback. But the market regained its footing. It broke the short-term downtrend, and it continues to trend higher. It found the support here at the 50-day moving average. You notice that over time right now we're seeing the market finding support, stronger support at the 50-day moving average. Over here it went below the 50-day and hung out there for a while. Here it dipped below just briefly before bouncing back. Here it kind of grazed it a little bit before moving higher again. So that's a good sign when you see these key moving averages offering more and more support over time is always a good sign. So definitely in a bullish uptrend. Obviously we'll see pullbacks along the way. And with earnings season, we're going to see, some days where we'll see really good earnings, other days where we'll see not so good earnings from different industries. And that's generally how earnings season goes. But so far, so good. And we have a market environment that's very conducive to swing trading. And we'll take a look at the 10-year Treasury yield right now, too. We can see that we're in a short-term downtrend on the 10-year yield. And we're actually finding support, though, at the 50-day moving average. And I think if you put the 200-day moving average on there, it will show some support there, too. Let's see. And we're finding some support, at the 50-day moving average. It's going a little bit below the 200-day moving average, but if you look at the fundamentals for this, things are looking like the 10-year yield will go higher over time. The Fed's increasing interest rates. The economy has picked up a little bit, and we've got a prospect of a tax cut coming up, and earnings are really good this quarter. So really, we should see some pickup in inflation at some point in the not too distant future. So this pullback is looking like it's going to be a higher low, and we'll see another move higher from there. That's probably what will happen given the fundamentals of the market. And take a look at the continuous contract. We can see here that we've made a higher low, and we haven't made the higher high yet. So 47.32 is the higher high. We want to break through to see this oil market start to trend higher again. And right now we're finding resistance there. Now this is not updated until the end of the day. This is the continuous contract, which is a weighted average of all the futures. But the front month contract, as measured by the USO, is actually breaking that prior high right now. So, oil's looking stronger now at this point. And we may see this go back up to, 1050, 1060, the USO. And, that's 7 or 8% or so above where we are now. So we could see that move like that and then find resistance up here. I could definitely see that happening in the days and weeks ahead with the good earnings news and, other things going on right now. So, yeah, but overall, we have a nice market uptrend. Things are looking bullish. If you look at, and we'll bring up some of the other charts I like to look at here. Banking index is in a downtrend, unfortunately, short-term downtrend, though it's more of a horizontal consolidation, which is good. And let me just double check here. A couple other ones. Want to see. Okay. All right, so this is interesting right here. This is the transports. They're starting to pull back. Yeah, we see the transports here. They're starting to pull back. And they made new highs first. So they're tending to lead the market a little bit, which is part of the classic Dow theory, right? Right now it's pulling back. So that may be interesting for the overall market. We may see a pullback here in the days ahead. And that wouldn't surprise me either. We've got Skyworks reporting later this week, and they're a supplier to Apple. And I don't know if the iPhone will have great sales this quarter. People are waiting for the new release. At least that's what they'll say. And I don't know what prospects Apple really has in the months or years ahead. I think maybe their growth may slow, and I don't know if the Apple iPhone is going to be the new one is going to have enough gadgets, enough of a reason for people to go out and upgrade. And I don't know if there's enough innovation there to really move the needle. So we may be heading to a situation where, Skyworks disappoints or has a so-so quarter or has a, lower outlook. I think the iPhone's been delayed now for another month or so, the latest one. So, I could see the market pulling back later this week on that news. We also got GE coming out, and they haven't been doing so well this year. Their stock price hasn't done so well this year. And, so we could see a pullback over the next few days. And that the transports going down first or moving lower is kind of a canary in the coal mine. It's not so much nowadays that the overall market may pull back a bit. And the other thing I want to show you was the advanced decline line, the NYSE advanced decline line. Okay, here it is, the advanced decline line. This is another good indicator too of the overall market health. And we can see that advancers are outpacing decliners here. The advanced decline line on the NYSE, which is a more broader measure than the S&P 500, and the NASDAQ, this advanced decline line, it continues to move higher, and that's good news. So we want to definitely see that, and it continues to march higher. So another bullish sign. Another thing that's interesting too that I noticed just now is that the consumer staple group is actually finding some support and is looking pretty bullish here. So this is S&P 500 consumer staples, and it just broke a downtrend here and is holding up after that break and consolidating sideways. So as the market pulls back, we might see some of the staples move up. So if you see a really good pattern on a consumer staple over the next few days, like a bottoming trade or a swing trade on a 10-minute chart or half-hour chart over the past couple weeks or something, you might have a little swing trade as the market pulls back, and if it does later this week. So don't shy away from consumer staples just because tech is so hot right now. Okay, that's about it for now, guys. I just want to look at this chart one more time. When you get these kind of moves within a couple weeks, they don't happen every trade, of course. So you got to enjoy them while they last. Here, I'll put it on a chart so you can size that you can see again. But you gotta enjoy that while it lasts. And I may continue just to make new highs. It might go up to 105, 110. Who knows? But as far as a good entry on a daily chart, sure, you can play a trade above the pre-market or the prior day's high and see if it goes up another few percent that day. And that's a possibility. It's going parabolic, so where that stops, we don't know yet, but eventually it'll stop, it'll pull back, it'll get close to that 9 EMA or 20 EMA, and we'll get another we'll get another good pattern on a daily chart to go after another swing trade. All right, that's about it, guys. Have a great day, and we'll talk to you again real soon. Thanks for watching today. If you liked the video, give it a thumbs up below, and be sure to tap my image here to get notified when our next video is published. And if you haven't yet, tap here to get our top 2 trading opportunities for the coming week emailed to you. Stocks with the right technicals and fundamentals to make a big move higher. And if you want to learn one of my best strategies, tap here and you can learn how to do it yourself.